traders this morning. We have Scott Bauer. He's the CEO of Prosper Trading Academy joining us here to take a look at some of the recent price activity. Scott, welcome. Happy Friday. No numbers today at the bottom of the hour to have a look at, but good morning. What are you keeping an eye on as we head into the end of a busy week? Definitely a lot going on here in terms of, again, we have a start of a holiday weekend. We've got unfortunately, I don't think anyone really feels like there's much to celebrate here, but I guess I'm curious your thoughts just in general as we head into the weekend.
Yeah, a couple things. Ben, over the last 4-6 weeks or so, it's been real interesting. Going into weekends, we've seen a mixed bag. A couple times we've seen, risk off. A couple times we've actually seen risk on. With the extended weekend, with the holiday on Monday now, we'll see what happens to trade towards the end of the day today. I have a feeling that it's going to be pretty much muted trade during the day and then maybe a little bit of a sell-off into the end of the day, just taking some risk off going into the weekend based on what's happening in China. The markets have rallied back, as you mentioned, since the overnight lows that we saw, pretty much all of that coming out of the news out of China with what they're doing in Hong Kong. But I really think we're going to get some muted trade today. People, investors, traders really just looking ahead to the long holiday weekend.
Yeah, it's interesting because while the indices have managed to shrug off some of the bad news, you mentioned China. There was some activity in terms of Bank of Japan that sparked some uncertainty as well, but or definitely prompted some concerns also. Definitely, crude oil doesn't seem to be joining in on this move. We saw it up this week to the 33.50 level. Interestingly enough, though, it's still negative on the day right now. I just took a look, actually, the Brent, WTI, both negative, the WTI down 3%. Maybe this will weigh on the indices a little bit today as they have slowed some of that momentum off the lows. I wonder, I always say that lower energy prices beget higher energy prices, and as demand has started to come back online, the optimism we've seen reflected in the indices from that. Certainly production cuts have been helping boost prices. I guess I'm wondering what could derail this move up from crude? What are some of the headwinds that the long should consider? And is, in your opinion, there more room to run, or has the best case pandemic recovery scenario already been priced in, Scott?
I think there is. I don't know if it's the best case, but I think there is a very optimistic, bullish case for pandemic recovery priced in. So to me, the overbearing, glaring thing is that if we reopen and it doesn't go well, if we start to see cases really on the rise and we have to curtail the reopening, that obviously is going to really hurt the demand side of things. And right now, there's a lot of optimism for gasoline demand, especially with more states loosening the lockdowns. And if it doesn't go well, which we all hope is not the case, that to me would be a big downside move in crude.
Yeah, definitely. It sounds like a little bit of a waiting game still. We're looking at some of the inventory reports this week where we definitely did see demand, well, at least inventories declining. That is a sign of some demand and some of that normalcy returning that you were just hinting at. Gas demand is certainly going to be a focal point in the coming weeks. Let's talk about another kind of bellwether indication in terms of economic conditions, which for the most part has been suggesting kind of more along the lines of what we've been seeing as far as the indices, Scott, off the March lows. Copper's been rallying. The move has been definitely closely tied to the move that we've seen in crude off those recent spike lows, maybe more tied to some of the expiration issues. But copper's been signaling, again, that things could be turning up a little bit at the very least. The worst is maybe behind us, back to mid-March levels.
Yeah, no doubt about it. And China is the world's top user and producer of copper, and their inventory levels are down about 50% since the bottom of the market about 2 months ago. So that shows that activity has been, I don't know if it's robust is the right word, but activity is really picking up overseas. And you see copper kind of trading almost dead center of the middle between the absolute lows that we hit back in, towards the end of March, and then recent highs and even highs going back to the beginning of the year around the 285, 290 level. So it's really in a inflection area right here that honestly, it could go either way. Now, my gut tells me it's going to pop to the upside here if China continues with the infrastructure plans that they have right now, and if their reopening really is going to be robust, I think we get a pop in copper here.
Yeah, definitely. We just had a look here. I mentioned mid-March levels. I'm glad you pointed out that 288 high from the beginning of the year all the way down to 197, Scott, as you mentioned.
Yep.
And we're also above the 50-day moving average right now. Let's talk gold real quick, Scott. I'm curious. It's been bid hovering 1750, kind of teetering this week for the most part, solidly above its 50-day moving average. But balancing for the most part, 1670, 1680, we'll call it, up to 1788. What do you think the next catalyst could be there? Will it be some weakness in the U.S. dollar? Will it be rates potentially, Scott? Where does that next move come from in terms of gold?
Yeah, I think you just hit it, Ben. I really think it's going to be highly correlated to what we're seeing with the U.S. dollar, and gold has remained bid over the last few sessions, last few weeks, because we have seen some weakness in the dollar, and if we continue to see that, that's gonna keep a bid underneath in gold here. In terms of rates, I think rates are I don't want to say it's off the table right now, but I don't think there's a lot going on with rates. The Fed doesn't, is not going to be doing too much in the near future here. Rates are stable. I think it's really going to be tied more to what happens with the dollar. And as risk off, if that risk off sentiment around the world continues, that's a weakening sign for the dollar as people flood to other currencies other than the dollar. Again, that could really underpin a bid in gold.
Scott, talk to me in terms of next week. I mentioned no data really today, not at the bottom of the hour at least. Baker Hughes rig count at noon today, Central, 12 p.m., 1 p.m. Eastern. Talk to me in terms of what you have your eye on as far as upcoming next week and what we should be looking at.
There's still some pretty significant earnings coming up next week, but I think that the overall market is going to trade on the psychology and on the optimism of reopening. We've got a lot of states. I know here in Illinois, May 29th, coming up, everybody's anticipating that next week for a big reopening, and that's happening across the country here. So I think that there's going to be a lot of psychology into
All right,
the marketplace.
Scott, really appreciate. Go ahead. I'm sorry, Scott. I'm sorry.
No, that's okay. I was going to say, I think there's going to be a lot of psychological trading based on the optimism of reopening and how that goes, as more and more states are now right at forefront of phase 3 or phase 4 of the reopening. But right here in Chicago and in Illinois, we're getting a big next step coming up next week. So is the market going to take that positively? Have we seen too much ahead of the reopening? Is it a buy the rumor, sell the news? So I think we're in for some more volatility ahead of that.
All right, we'll keep an eye on that, Scott. I apologize for interrupting you there. Your audio cut out for me a second there. I thought you'd finished up there, though. Hey, Scott, really appreciate it. That was a great breakdown in terms of some of the commodities that we've been talking about here this week on the Future Show and what's behind some of the price movement, some of the demand concerns that we've been hearing about. Are they being alleviated or not? Really appreciate it. Again, always a pleasure to have you on the show. Scott Bauer, the CEO of Prosper Trading Academy, taking a look at some of the fundamentals with us here.